Our next panel is titled Scaling and Cultivating Leadership in the Domestic LP Ecosystem. Do we have the dream team to discuss this?
Please welcome our esteemed panelist, Purav A. Jhaveri, President of Investments at Bajaj Finserv, who knows the mantra to turn financial strategies into success stories.
Joining him, we have Neeraj Bharti, General Manager at State Bank of India. He has been painting success across the canvas of banking. Also with us today is Sanjeev Bhatia, President of Multinational Corporations and New Economy at Axis Bank. He's been bridging the gap between multinational strategies and local triumphs like a true maestro.
And last but not the least, Amit Bhagri, MD and CEO at Kotak Mahindra Investments, a leader whose strategies are as sharp as they are effective, guiding investments with a visionary's eye.
And to steer this panel through the intricate world of investments and leadership, our moderator is none other than Vikram Gupta, founder and managing partner at IVCAP Ventures. A big round of applause, everyone. Over to you, Vikram.
Thank you, Madhuri and Meera, for keeping us all on time since morning. I think, I know that we have to make sure that we'll do our best job within the assigned time we have. As you all can see, we've got the best, potential, people who have really defined this entire ecosystem in terms of being the LPs to this asset class. And I think it's quite interesting how the landscape has changed in India. I still remember when we started IVCAP in 2011, I think there were just about 8 funds. And today, I'm told that there are about 1,400 registered funds on SEBI website. Half of them probably still raising their first-time fund. But I think that tells you the kind of number of funds out there which are raising funds and which are investing in the startup ecosystems. It also talks about the opportunity available for entrepreneurs today in terms of raising capital. And it's also an honor for IVCAP to have support of some of the best Indian institutional investors, including the ones sitting here. And thank you so much to all of you for really supporting IVCAP. And some of you have been there right from our Fund 1, so really appreciate that. I would like to start this actually maybe with a brief introduction of each one of you, and maybe if you would like to say 1 or 2 liners about yourself, and then maybe we can start about the discussions after that. So maybe Purav, if you can start from there, and then we can come this way.
Thank you. Purav Jhaveri, Group CIO for Bajaj Finserv, looking after the investment teams across insurance businesses as well as the family office and our ventures business as well. I'm part of the leadership team at Bajaj Finserv, and we invest across equity, fixed income, and alternatives.
Good afternoon. Neeraj Bharti from State Bank of India. I am handling debt market, equity, private equity. We have a small, reasonably small size of portfolio in private equity, around $1.5 billion. So obviously we are working for the development of the market and profit making. Both the focus is on both the factors.
I'm Sanjeev Bhatia from Axis, part of the client coverage team which looks at multinational, new economy and financial sponsors. For us, we've used the LP investment route to get an insight and access to the startup ecosystem. Just as an aside, I'm also an IIT undergrad, and so this it's great to see what Vikram and team have done in terms of mobilizing capital from ex-IITians. So all the best. Yeah.
Thank you.
Hi, my name is Amit Bhagri. I'm the MD and CEO of Kotak Mahindra Investments. Briefly, my journey, I've been part of the investment banking group with the ANZ and PwC in the early part of my career, then with ING as part of the merger, moved to Kotak, where I looked at conglomerates, and now in this role for the last 5 years.
Great. So thank you so much to be part of this discussion. So I think the first thing I would like to understand, and I think you've all seen this market evolve over time, and even at IVCAP we've seen over the last 13-year journey how this ecosystem has evolved. But I would love to hear your views, how you have seen the Indian market evolve, more from the perspective of an LP, a limited partner investing in venture capital in the domestic market in India, because you've been very active now investing. But I think your journey over time and how you've seen this ecosystem evolve. So maybe, Amit, if we can start from your side here, and then we can go on.
Sure. As Kotak, we've been active participant through our alternate assets platform into this space for a long time. And of course, the focus there was different. I mean, while on the consumption side, it was real estate and special solutions, etc. But the LPs were largely global institutional investors, not domestic. And, I was speaking with Srini a few days back, and he told me that the way the market has prospered today, or rather the market has moved today, if we don't enter the domestic investor space, whether it is institutional, ultra HNI or others, then we'll be left behind. That's the pace of growth of the domestic LP market. I feel, some reasons are obvious, some of which and three categories I would like to divide that in. One is the fact that many of us somewhere, one way or the other, have been touched by the growth in the new age capital, new age growth, made money there, and therefore have belief in that and are therefore investing in it. Two, obviously, capital markets are surging. People have created wealth and are looking at alternate assets to invest. And three, I think, is the rise of family offices. This I am seeing across where I am talking to even many mid-cap promoters. They want to create a family office. And the moment you create a family office, one portion of that fund is bound to get into alternate assets. So I think that's the reason for the growth, and I think it's only the beginning.
Sanjeev, how have you seen the market over time?
So I think for a developed economy and for the per capita income that India has, I think we have remarkably deep public markets, and they've been working very efficiently, and we've had some and if you look at the breadth of sectors which are covered in our public markets, it's probably second to none globally, right? So I think we've now seen investors where we have seen investors in India have been seeing that a lot of private investment was traditionally done only by global funds, right? And they would ride the curve and make some fantastic returns, and then the Indian investors will come in the public markets. So I think this is a natural course of evolution where a lot of investors who were doing only public markets, they are now slowly getting into the private side. So even investors who would invest in public vehicles, they are now investing in private vehicles, right? Banks, who as part of their treasury operations were taking positions in the public markets, they are now, keeping capital aside for the private market. So I see this as a natural course of evolution. Indians in general are, hugely entrepreneurial. This is one way in which it's manifesting. And again, kudos to SEBI as well in terms of creating the regulatory framework in which private funds can prosper. So I think it's an evolutionary phase, and this is only going to get better as we go along. Yeah.
Thank you. Mr. Bharti, State Bank of India has been investor with us since 2012-13. And I think that time venture capital was very new in this country. I just want to hear from you in terms of, from an SBI perspective, seeing an opportunity at that time and then continuing to back. I think you've been investors right across our funds, Fund 1, Fund 2, Fund 3. Would love to hear your thoughts in terms of how SBI has seen this ecosystem evolve over time?
SBI is in this space for long. First investment I made 70 years back. But all initial investments are more from the development angle. So State Finance Corporation, we have investment almost across India. We have actually started serious thought along with you, almost you, 2012-13. And I placed this market in the age of a young of 16, 17 years. So when a young person in his age, irrespective of income group, irrespective of which part of world he is residing, which caste he is, which creed he is, he has a number of ideas. And failure of one or two ideas does not mean the ideas are not there. The same person comes with new idea because there is a lot of energy. So this market is in this phase. Many players came, some proved their success, and now they are guarding the market, they are guiding the market. Ivy Cap is one of them. Some players failed, some are still struggling. So the role of the market player who has gone ahead, who has successfully shown their result, is to guide them who are coming in the market with new ideas and make it sure the number of failures should come down. So I look at the market in this phase. A lot of energy, a lot of scope. Failure percentage rate is still high, that has to come down. But there are chances of success also gone up. That's the silver lining in this.
Great. No, thank you so much for support that SBI has given us, and it gives us a lot of confidence. And I think it's now giving a lot of confidence to the entire ecosystem, with your experience. But Purav, how have you seen this evolution?
Thank you, Vikram. Good question. So before I came back to India in 2020, I was in Silicon Valley for 20 years with Franklin Templeton and saw the VC world firsthand. And I think in the first 10, 15 years, there's a stark difference between US VC world and India VC world. And it's actually just one flight away in some sense, but it was really there. But over the last 5 years, maybe early 2020, maybe 29, for the last 3-4 years pre-COVID, we could see a lot of VCs, one, moving back to India, finding the growth, more chasing growth on the ground versus, and the local ecosystem in the VC world in India also really got stronger. So as Mr. Bharti was saying, that the quality of new entrants also were improving. So what we have seen is now India is probably 3 or 4% of global share of VC funding. But in terms of the type of deals, whether you discuss AI, you could, when you talk to a company or hear the description, you don't know whether it's a Silicon Valley company or an Indian company. We have all those opportunities now locally here. And I think the ecosystem has changed. Just as investors for us, I remember years ago, we used to go and actually try to convince the IC and the board, we are trying to invest in this fund where you will not see anything for the first 4 years. You'll not get your money back for another 2 years. You're paying them 2%, but believe me, it's a great idea. From there, you've gone to where the board and the IC is now telling us, are you increasing your alts? What are you doing about it? So that's been the full change I've seen in the last 5-7 years.
Oh, that's amazing. Now, in fact, I think, of course, everybody knows that convincing you guys is not easy. When a venture capital fund comes to you guys and, tries to convince you why you should invest in them, I think it's an institutional process, right? It takes a lot of time to make sure that people build that conviction. What do you look for? I mean, if you can start, Amit, when you're looking to invest in a fund.
So, while always, whether it is a fund or whether it is a loan that we are giving out, finally, obviously, the first step is the people behind the fund. Who are they? What their intentions are? What their credibility is? What have they done, etc. Those are the usual things we look at. But when we looked at this investment, which was our first investment outside the group, otherwise. KMIL has done investments in Kotak's other alternate assets fund. I think the key thing for me when I recommended it to the board and for the board was the learning that we'll have with this. This is a space that was at that time and still to some extent is unknown to us. So the whole intent, and there are some colleagues of mine, colleagues sitting here who were involved in that process, was about learning as to how this space is developing. And therefore, in future, at some point in time, how we can take advantage of those opportunities. I think that was the key driving thing for us, apart from the fact as to who we are going to be invested with. So I think that was our key focus.
Sanjeev?
So for us, this has been a strategy to get a lot more aware and understand how the tech and the startup ecosystem has been working in India. Of course, goes without saying, Vikram and Ashish and rest of the team in Ivy Cap in terms of the professionalism that you bring to the table. But the track record, the kind of startups you have supported in the past and how they fared over a period of time, and how we as a bank and as an institution can leverage this investment to get better access to the whole startup ecosystem. So that's been our strategy, and the kind of openness that a fund kind of displays in terms of us getting into the ecosystem, that's a very critical part of our evaluation.
Great, thank you so much. Mr. Bharti.
Yeah. From State Bank, we always look at what is happening in the market. So the first question, if someone asked me in my organization, within my organization, whether we should do it, we have never done it. The first question we ask, then why we have not done it till now? If we are not able to answer why we have not done it, then we should try it. There can be only two ways. You do it and learn, or you learn and do it. So in this space also, our focus is we want to be a part of market because it's a new thing and we want to do it, we want to learn and master it. While investing in any funds, our first focus is corporate governance. That is utmost for SBI. So any decision, if corporate governance is not there, we are not there. Then obviously second, we are a commercial organization. We need to give values to our shareholders. So the return, what is the IRR they are generating. And behind that, then it comes what is their strategy, what is their past record, whether they are capable to show what they have said, and then what type of companies, what type of segments they are looking into.
So team, track record, corporate governance, I think these are very, very important factors. Purav?
I guess for us, the starting point has been the investment objective that we have. Based on that, we would shortlist the type of funds or the fund groups that we would look at. Within that, I think it goes back to the management team. Have they worked together before? If it's a first fund, you still want those dynamics to be sorted out. Secondly, comes back to the structure. Who's the deal captain? Who's running with that? How is the exit strategy? And lastly, there's a lot of money that's available. So it's all about what else does the team bring to the table in terms of the value add to the promoters themselves. Can they actually be the grown up in the room? Sometimes the promoters are very enthusiastic, but to help them actually monetize and build something that's sustainable. I remember Sergey Brin and the Google guys, and it was Eric Schmidt who said, I'm the grown up in the room. We got these two great founders, but I'm still the grown up in the room. So in some sense, that's a very valuable role that is underplayed or under talked about, but it's what you actually do with the startup founders themselves. It applies not just early stage, even late stage. And I think that's a big part of it. And then returns, but largely returns, you have prospective sense what is coming. So that's why the second fund sometimes is a great comfort. Once the first fund's done, you get a sense of how the investment ideas have been, the vintage. And lastly, diversification. What we see, and I say this largely because we are a financial services company, that a lot of funds we have seen have more fintech or NBFC players because that's where the capital is required. So to that extent, are they diversified, or are you actually just looking at the supply that's coming? So that's part of a big decision as well.
Well, that's very interesting, and thank you so much for this perspective. One thing which always bothers me is the fact that, while as a startup ecosystem, we've now become the third largest startup ecosystem in the world. We're talking about close to 150,000 registered startups with DPIIT, and also the third largest number of unicorns. I think where we are still lagging behind is the emergence of domestic capital as a percentage of the total capital available in the startup ecosystem. We're still talking about less than 15% of the capital available to startups. It's actually domestic. And I think that's one of the challenges which startups are facing. While we're seeing a lot happening now at the incubation level, at the seed level, I think as the startups start scaling up, I think there is a gap that starts building up in the later stage capital. And there's a lot of dependence on dollar capital. You're talking about almost $150 billion of capital, of which only 15%, we're saying less than 15% domestic. What do you think is missing, and what do you think can be done to increase this, let's say from 15% to 25%, let's say in the next few years? And what are the things that the institutions can do, or maybe our regulators can do, or maybe as an ecosystem we can do? Amit?
You know, you're right, the number is 15%, but the number 5 years back was nothing, almost nothing. And I think that change is happening on its own, Vikram. In my view, there is no dramatic change required in regulation or policy. Of course, policy should not be there to stop it. I mean, there have been, of course, some recent regulations which have had an impact, definitely on the debt-focused funds, more so than the equity-focused funds. But when I talk to people, when I see people, very clearly the family office is clearly enamored with this space. Now, it's also up to us as, of course, LPs, and you as people who are managing the funds, to make sure that everything doesn't go with the flow. And while people are today getting a little worried about the public markets and its valuations, I think clearly there is a shift of some of that capital moving out of public markets somewhere into, at least people are thinking about it. I have no statistic to say that that is already happening, but when I talk to people, clearly that is on their mind. Should I move something from this asset class to something? I mean, there was 5-6 years back, the only, I always jokingly say it, privately held public company was NSE, right? Which was traded, owned by so many people, but it was not listed. But today, there are so many companies where you can easily get equity even though it's not listed today. So clearly that is changing. I think it will increase on its own. Now, rate of change can be debated, but I think that direction is well set, in my view.
Sanjeev, what's your view on that?
So I think when we say global capital or dollar capital, let's say, it's essentially the US markets, right? And the total size of investable capital which is available in US is, let's say, X. Then a percentage of that is coming into private or venture, and then a larger percentage would come into equity, debt. So it's like, it's an asset allocation which is happening in the overall pool of capital. I think it's the same thing which is going to happen in India. As the overall domestic pool of capital increases, the overall pie increases, then that percentage of that pie would also increase, right? And I think that is what we are going to see. Amit raised a very valid point. I think deep public markets always provide the exit route and the recycling which happens, right? And I think that is going to be a secular trend going forward. My sense is it's just about creating awareness, getting more, let's say, the capital which is there in gold, real estate, all of that coming out. Family houses, again, these are traditional businesses where there's a lot of capital which has been deployed. Traditionally, they've just been recycling capital into their own businesses. But as their businesses scale, they're forming family offices and kind of diversifying capital into other forms, right? So I think these are some of the secular trends that we will ride. And as part of that, the pool of private capital will go up. Yeah.
Interesting. Mr. Bharti, I think, SBI with the size of its book and given the potential opportunity with the public sector banks and also overall in the institution, how do you think, this pool of domestic capital can go up? What can be done?
That's correct that domestic pool is still small. If we say about SBI, our portfolio is doubled during last 2-3 years. But still it is less than 1% of total portfolio which I handle. Forget about State Bank of balance sheet. I am handling 17 lakh crores of portfolio, and my PE space is around 11,000 crores. So it's less than 1%. But this is a development is a process. It cannot come in a day. When we go into private equity space, obviously as a commercial account, commercial organization, we look into the return. There is a higher risk in this space if you compare it with debt or even direct equity. So obviously we expect some better return. Unfortunately, there are a few funds who commit much more than what they can actually deliver. So we have funds, we have guaranteed rate, which are committed return of around 30%. and ultimately able to deliver a good amount, 18%, 90%, 20%, which is not at least bad. But if you are overcommitting, the confidence of a structure comes down. As Sir has mentioned, if it is a second first, our comfort level is better. That is across the organization. Why it is happening? First fund, we see what is the actual delivery and what was the commitment. Second fund, we have some confidence on the system, on the investors, on the structure. First fund, we don't get that confidence. The main reason of gap is what they are committing and what they are able to deliver. There is a vast difference. If the fund knows ab initio that we are not able to deliver 30%, then they should not commit. That will help in increasing the confidence. And rest organizations will come. For example, I told that our portfolio has doubled in last 3 years. It's going to continue. Its exponential growth is going to continue.
Interesting. Purav?
Yeah, I think the NSE example was a good one where since the IPO got delayed for a while and the underlying business was growing, there was a large secondary market that developed. It's almost like a very widely held company despite not listed. And I think that's we see in the US as well, a good secondary market when it develops. People feel I have an exit in that sense, I can even access both ways. And that leads to bite-size access to these spaces which people may not be willing to commit large amounts. But you take that bite-size access, try 3-4 companies, see them develop over a year or two, then there's confidence to commit more capital. So I think as part of it is that whole sachet feel that you can get if a secondary market is developed. And the other side is, I think even regulation, say insurance companies, for example, can't go beyond 3% at this stage. And it's a chicken and egg. If you get to 3, then the regulator might say do more. But people say if it's only 3%, do I even worth building a team to do that? So some of it is just that. But I think largely it is if people get exposure to space and try out and they see the comfort that comes in, and you feel, okay, returns are possible and it is liquid for me to the extent, not like a Nifty 50, but it is liquid with the planning, then there's definitely more capability and more money coming in over time.
So basically what I'm hearing is it's a part of a natural evolution process, basically. Like as you said, it has come up to this level of 15%. It was hardly anything some time back.
And Vikram, if I may just add, in my view, it is the institutions, the non-institutions who will drive this faster than institutions. That's my view, even though all of us here are representing some institution. I think that entrepreneurial spirit, I think one of us talked about that, is there, and I can see that. I think that will drive the growth.
No, that's very interesting, and I think through that evolution process is also a lot of learnings which are coming, and therefore the confidence, and what I'm also hearing is that capital is there. It's just as you build more and more confidence into this asset class, people will come back with more conviction, and therefore the percentage will grow very naturally. So the other thing which I wanted to also talk about is actually, in fact, Mr. Dinesh Khara was there this morning for the keynote. And he also mentioned one factor about doing co-investments with funds. In fact, State Bank actually started their co-investments with IV Cap, and I think that's one aspect of investing along with the fund to build more confidence and also work on maybe getting some direct exposure in some companies. Are you guys also looking to get co-investment opportunities when you look at investing in funds?
Let me answer. It's a short one. For us, we haven't done it. That was one of the thoughts, I must admit, when we decided initially to go with you. But we haven't done it, various reasons, our own DNA, etc. But hasn't happened as yet. So not part of our immediate plans.
How about you, Sanjeev?
So we've been looking at this space very closely. So what we normally do is that go through the portfolio of the funds and see if there are any interesting opportunities. But a very strong lens that we are using is that it should bring some strategic capability to the bank. So, as you know, banking today, the digitization quotient is increasing every single day, and I think not everything can be built in-house. So we are constantly scanning the portfolios to figure out if there is any portfolio company which brings a unique capability, and that's where we will probably do co-investments. But yes, a wider lens of co-investment just for financial returns, that's not something, that's not a space we are in. Yeah.
Got it. Mr. Bharti, I think SBI has already started doing co-investments. How's been your experience?
We are there, and I will put this in another way. If a fund is coming to us with a remarks that we are not going to give you co-investment rights, probably I'm not going to take that fund to my board for sanction. So we are on other system. We want to part of complete ecosystem. We want to develop the whole structure. So obviously we are always there.
Oh, that's interesting. Purav?
Co-investments are a core part of the strategy. And the reason is that when you invested in the funds, we look at these companies quarterly, get more comfort over a year or two how the companies are doing, understand the space. Then when there's a co-investment opportunity, there is higher conviction to go with that. And generally with that conviction comes larger sum of money from the company. And that leads to hopefully a better IRR outcome weighted between the fund and the co-investment. And that's the true reason we look at co-investments. That's it.
Great. Yeah, I think this it's a combination of strategic and financial returns. So I think that makes a lot of sense. The last topic I want to cover is more about the evolution of regulations in our country. And I think an insurance investor is regulated by IRDA. The banking side, you're regulated by RBI. And I think we've seen, regulators coming with different kinds of regulations. And many times there is a little bit of back and forth, and we've seen an example recently. But I think if you can give your perspective of what you think about how regulations have evolved and what you think can be done, to really open up this this domestic capital from a regulations perspective, and what regulators can do to really promote this.
Actually, the regulation, specifically the one that we're talking about, got for the banking side at least, got triggered by certain transactions that happened in the market. And unfortunately, when those things happen, regulations come into place, and then the good, bad, and the ugly, everything gets sort of whitewashed with the same color. I think that challenge remains today for us also as Kotak. Wherever we have done some investments, there are limitations on what we can do with some of those companies, and we are looking at that closely. I think that will remain a limitation. At least our conversations with the regulator suggest that we are not seeing any material change, at least in the near future. Though it impacts the debt funds more than the equity funds in that sense. But I don't see a material change in the near future at least.
Sanjeev?
I think the tone which is being set from the top, the Prime Minister and the government, that is very clear that they want institutions to support startups. And to that extent, we are all hoping that the regulators kind of stay aligned over there. But yes, I think, prior to this incident that Amit was referring to, there weren't really any frictional issues, so to say, in the regulations. So let's see. So I think we are governed by the RBI, and they're very clear, and they want to avoid any kind of conflict of interest, and very firmly, right? So we'll have to stay aligned with that. There's still something going around on equity versus hybrids, in terms of the RBI regulation. So hopefully that should get sorted out. But yes, I think I don't think banks coming back into venture debt investing in a big way. I think that will firmly stay closed. But my sense is equity will continue. Yeah.
Mr. Bharti?
So I will reply this question from the angle of regulator. I will take side of regulator. As Mr. Amit has mentioned, there are few transactions in the market where RBI was not comfortable, and almost everyone in the hall knows about those entities or those transactions. The regulator come to know about any irregularity or unethical transaction with a time lag. The day one when the transaction happened, market players were aware. Whether RBI took that action or not, before that, almost every market player was aware there are some unethical practice going in the market. Now, why we are waiting for regulator to come in? When regulator come to know, that will come obviously with a time lag, maybe 2 months, 3 months, or 2 years, depending on the nature of seriousness. And they will go through their own supervisory process, regulatory methods, They will discuss in their level, then they will go to the company back or bank or NBFC back, and they will ask clarification from them. That process takes a longer time. After that, when they see that this problem is not getting resolved and there is a risk of spillover, then they take harsh actions. I think last week we have seen a news item in ET also that SEBI has asked some AIFs about their side letters and contracts with the AIFs, whether they are giving any type of differential treatment to some of the participants. Now, differential treatment is a normal thing in the market, in any market. When you go to retail shop and when you go to a large shop, the prices will be different. The margin run by the large players get, and the small players get are always different. That's a set market practice. Why SEBI is feeling there is something wrong in that? Obviously, market players should be aware. If we try to avoid these things to come in, we will be in the side of regulators, then facing the actions of regulators. We can do this through some SRO structure who will keep a balance between two. They will take care of regulators' needs, their wants, and take care of the industry also. Then this type of disruption will not happen. Whatever communication, whatever instruction will come, that will help the development of market, not in disruption market. That's my view.
Oh, very interesting. Purab?
Vikram, you rightly said evolution of regulation, and I think that is what regulation will do, will evolve. But I think the point is that we do need a stronger industry body that actually becomes a first line of defense against things and practices and tries to proactively guide and encourage the industry to perform and behave in a certain way. That itself allows better regulation in some sense, which is less prescriptive. So I think that's the part. While as you mentioned, a huge number of startups, you mentioned a huge number of funds registered to SEBI. Now getting that industry association to have teeth in that sense and actually come across as one cohesive organization that's forward thinking and really thinks of investors, which is I think largely most of them do, only a few bad actors. But if that comes through well, then regulation itself takes a step back, saying, okay, I'm dealing with people, and anyway it's a buyer beware market. This is institutional money, largely it's not retail. To that extent, regulator can, I think, ease off if the industry bodies are stronger.
I think that's all the time we had. And I also want to thank all of you because with your support, we were able to raise the largest domestic capital, venture capital fund, which is our third fund, which is 2,100 crores. So thank you so much for all your support. And thank you for your time today on this panel. Thank you so much.